Um, I took time and made comments about going forward using the product the way I had been introduced to it and the way I discussed it with the salesman. What I learned is that the contract that I signed, rather than being able to use it when I chose, I was tied in with all of the business that I did through my company for the next 2 years, everything. And I didn't even understand how that was possible having a relationship with the bank. So I did everything I could legally to get away from the factoring company, even though I had signed the contracts. So fast forward about a year of legal things between lawyers, my company and I were free from this mess. So rather than just moving on and thinking I'll never go down that road again, I went researching factoring of what's the problem with it? Why is it hated? Why did I go through this? And I learned that it was simply taking a contract that was designed to protect a lender and turning that contract into a controlling mechanism for businesses so that you got all their business and you got more money out of them. You got every angle there was. So what I did, quite frankly, is I just went and bought a factoring company. Extremely naive, did not understand the industry and the ins and outs of it. But I went and bought one because I was just taken that somebody would do to me what this factoring company did. So to jump the whole story forward, our contracts are thick like most any lender because it does have that information in there to protect us so that we get paid back. However, all of that other stuff has been removed. So there's nothing in our contracts that say a business has to use us at all, even after signing the contracts. There's nothing in our contracts that say that a client has to use us a certain amount or has a minimum or has a maximum or any of those kind of things. And the reason for that is because I feel the only way I wanted to offer this product is if I can look at all the prospects, clients, brokers, everybody that I work with daily and say that we still want the decisions that are made for a business in their AP and AR talk and what bills do we pay and all those things. My covenants should never be in that discussion. So we have it where that discussion can take place. They can choose how much in dollars they want to factor. They can do associated invoices that come up with a dollar amount close to that. And they're happy because they're controlling their financing costs. And they're not putting their business in a spot where someone else makes decisions. Brock, if you'd like to jump to the next page, the only thing I did want to do is partway through my visit there, I wanted to ask the group, how many people know what factoring is? Should I have talked about that?
Yes, please enlighten us what factoring is.
Okay, I apologize for jumping ahead there a little bit. For those of you that don't know, accounts receivable is collateral just like a truck or a building or anything else. And accounts receivable is offered up as collateral for things like lines of credit at the bank and so on and so forth. If you're not bankable, your business doesn't have proper financials or isn't profitable or too much growth and you scare the bank. I see a lot of these things every day. Then you go to the outside market, which is alternative lending. And in the alternative lending market, accounts receivable is just as important as it is in the commercial market at banks. And in the alternative market, rather than just using it as collateral, we take it a step further and do what's called accounts receivable factoring. And really what that is I use what's called a purchase and sale agreement where I purchase the invoices from our client, which then allows me to collect that invoice. and I advance a number like, say, 90% of the invoice to the client on day one. Then, if the terms are 30 days or 60 days or whatever for the invoice to be paid, I hold the invoice and wait. And I do things for our clients, like if our clients have portals, we'll put the invoices in for our clients. We'll submit them to their customers for them. If they choose that, they can do some of these things themselves as well. Pardon me. But we then wait, and as soon as we collect the money that we had lent out on that receivable, we close out that invoice, put the money against it, and you may have noticed that we advance generally 90%. So we still have that other 10%. And at that time, once we collect the money, then we refund that 10% back to the client. It's called a reserve, and really what it's for is just in case there's a short pay or something like that. Before I go back to the little PowerPoint that we have, does anybody have any questions about that?
Well, if you cannot talk, feel free to type in your question in the chat box.
Brock, if you'd like to go back to... Sure.
So this is Juan from New York. So you're basically providing them 90% upfront when you take possession of the receivable, and then once you get paid, you give them back the 10%. So 100%. I don't understand how you make money.
Well, you spotted out that really quick, and you are correct. So we do advance 90 and we refund what's left of the 10. Our fee does come out of the 90 generally. And the reason I use the term generally is because it's usually 1%. So in other words, they in a gross conversation of the gross dollars, they get 90%. In a net, it would be 89. And another reason why I said generally is because a lot of times I structure the rates to best fit the client's customers. So I need to learn the terms that are in contracts and so on. And then I also like to learn, if you've worked for this company for a long time and they say they're net 30, do they pay in net 30 or do they really pay in net 45? We can't change it, but we can plan for it. So sometimes I will structure it with a daily rate. So in other words, if the client tells me they're 30-day terms, we'll do a 30-day rate. But if they tell me that they generally receive the money on day 33, which is very, very common with ACHs and so on, in those cases, I do a daily rate. So rather than getting charged another full percent or two, because it goes 3 days, a lot of companies will charge a block rate. I do it by a daily rate. So it would be like, say, for an example, 0.05 per day thereafter. So really that client for those extra 3 days would pay 0.15 rather than a block rate. And that's how we make our money. So in that particular example, you would deduct the 0.15 from the 10% before you released it back to the client.
I see. Thank you.
Absolutely. And thank you for straightening me out that I didn't state that part of it. So, okay, Brock, if you'd like to go back to the slide and do your portion, that would be wonderful.
Oh, looks like I'm going the wrong way. There we go. Yeah, so Brock Baker, as it was mentioned, I am Bob's son. I've only been working with Baker Garrington for a little over a year now. I actually started out as an intern as I finished out my undergraduate studies. So for me, it's been learning from Bob, learning from the rest of the Baker Garrington team, and continuing with the flexibility and the approach that Bob has brought into accounts receivable factoring. You know, for me, I can see a lot of different angles looking into the industry from the outside and being new. seeing some of these regulations that and restrictions that other companies do have that are in the factoring space. And for us, taking more of a flexible approach, and maybe we don't make as much in the short term as some of our competitors do. However, we feel that we keep our clients for a significant longer amount of time, being that they have that flexibility. We do not have any restrictions as a financial partner. They feel like they can remain in control of their financing and make decisions for their business that they feel are best for them overall for the business, whether that's growth, fulfilling their obligations, whatever it may be. So for me, it's been a big learning period here the last little over a year, and continuing to do so moving forward, and continuing to help businesses with the cash flow that they need to operate and to grow. So, and with that, kind of go right into the next slide discussing the factoring, and I think Bob would jump back in.
Yeah, I sure will. So for the group, everything that we do is revolves around accounts receivable. We do other things. We do asset-based lending as well. Asset-based lending, those assets may be accounts receivable. It could be real estate. It could be a lot of different things, or it could be an encumbrance of multiple things to be able to reach a loan to value that will give the business what they need to prosper. So, as you're out in the marketplace and working with clients, many clients were like myself back in 2008, where I didn't know what accounts receivable factoring was. And a lot of companies, when they learn, that they have this ability, even if they can't work with a bank and they're not bankable to get a line of credit, that we will do this of liquidating their accounts receivable so that they have the cash for lots of different things. The cool thing about it for us is that my business partner is the Garrington half of our name. And our business partner is also the owner of Garrington Financial. And Garrington Financial does a lot of the same things that we do, with the exception of they may have a $2 or a $4 million minimum. They work with much, much bigger companies, whereas I really don't have minimums. And along with that accounts receivable factoring, what I also do for these businesses that you may represent is that we'll also do small loans alongside our factoring facilities. Sometimes those are collateralized, sometimes they are not. It really just depends what it is, what it's for. A month ago, I bought a gentleman a Bobcat. It was an oil and gas business that we were factoring for, and he was struggling to get the equipment that he needed to do his work, and he was paying too much leasing it by the day. So we bought him a new Bobcat alongside of his factoring facility. We have some where we've done real estate transactions, and one gentleman at a business, we bought him a new business place, and so what I'm trying to kind of express is that we do the accounts receivable, but we offer many other things coinciding with it that your clients can use. And the cool thing about that for you is that we do stack commissions. So what we generally do on factoring is we pay for the life of the deal. And on that deal that we pay for the life of it, we pay 20% or 15% on factoring, 20% on anything to do with our fuel cards, 20% on anything to do with our software, which is called TallyPay. So the more of these things that a prospect would use, or when they become a client, you get paid on all of it. Anything that happens with that client, you would then get that percentage for the life. It's kind of neat, where I have a gentleman that I met back in 2011. I spoke to him for the third time a couple of weeks ago. And he sent one of his buddies to me back in 2011, who was a truck driver in North Dakota. And I signed up this truck driver. And pretty soon the truck driver had 5 or 6 trucks. Pretty soon he had 10 trucks. At one point he had about 30 trucks running. And ever since 2011, this gentleman that introduced me to him has gotten a paycheck the 23rd of every month. And this gentleman has had multiple loans. So he's gotten the commission on all of those loans, and he's gotten it now for, roughly 14 years. And when I talked to him for the third time the other day, he said there was a time period there where he said we didn't have a budget because you paid all of our expenses for my wife and I and our kids. And I'm sure that's when the dozens and dozens of trucks were running. But he said the rest of the time, he said, sometimes you'd make my car payment every month for the last 15 years. And it's really cool. And it's nice to see that those commissions go to good people and that they last for the life of the deal. So I guess what I'd like to do is touch base on the industries that we serve and then kind of open it up for questions. We've bounced around a little bit, and I believe that was my fault because of how I started. I should have explained what factoring was a little quicker. But the industries that we serve, to be very, very truthful, it's any. And the reason it's any is because if you have the proper work or service that is completed, they generate an invoice that can be sold to us and billed to the customer and paid without interference, it can be factored. Now, some industries are not really conducive to it. One that we have chosen to not be in is telecommunications because it's very, very tough for that process. So the ones that you see there on this slide, oil and gas, anything from trucking to sand to all the service providers to the crude itself. We do the whole works. Transportation, that's in and out of the oil field. So over the road, we have lots of programs for fuel, for diesel fuel for those over the road clients. In addition, we provide them with on-time credit reports on the people they're working for, and we factor them every day with daily pays. In staffing, it's a little different situation because generally you need to do your paying and your invoicing between the 15th and the 20th of the month for the end. And for that reason, we're a little bit in the rears. So what we do when it comes to staffing is we generally pay all of their workers. And it makes for a really unique product. We have software that does that. So we work with lots of staffing companies to factor their invoices, pay their people, and in some cases offer quick pays to their people. Because many of these businesses, what they'll do is they will say, we'll pay weekly or biweekly or whatever the case may be. However, for them to get the cash to pay quickly, it costs them a servicing fee to someone like myself or their bank or whatever the case may be. So in a lot of those cases, they pass on those fees and they call it a quick pay. So in other words, they may say to their workers, we can pay you today, every day for your daily work, but it's going to cost you 1.5%. However, if you don't want to pay the 1.5%, that's fine. You don't have to, but then we'll pay you biweekly. So that's kind of the staffing world a little bit. Manufacturing is very easy for us simply because manufacturing, you build a part, you sell the part, and it works or it doesn't. And then an invoice is generated and wait for payment. It's very, very simple. Most of these industries are pretty simple. Service industries, same thing. Service is a bit different because service, there's no good. It's simply what you do for someone else. So the only thing that is really different in service is that generally somebody is signing off your time, or maybe you have a scale ticket or a weight ticket. Maybe you punch a clock, whatever the case may be. But service is wonderful as well. Anybody that provides a service and has to wait to get paid, it's generally factorable. So that's, I guess, my presentation. Other than I would really enjoy questions, anything that you may have.
Well, thanks a lot, Bob and Brock. So let me start off with the first question right here. Um, do you have any requirement for the client? How many years they need to be in business, and what is the revenue, so on and so forth? Can you talk to us a little bit about that?
Sure. When it comes to working with a business and for them to be able to qualify with us, we have an application and we have a checklist of items that we look at. For generally speaking, their credit rating isn't important to us. How profitable they are is really only important because we don't want to hurt them. We want to be of help. So we look at margins from that standpoint to make sure that we're going to truly help them rather than hurt them. As far as years in business, for us, it's more important for a business owner to have a history in that field, to be taught and very well at whatever his trade is, rather than say you have to be in business 4 years to work with us. Because in a lot of the service industries, you have people that have done their craft for 30 years and they're fabulous. They may quit this year and start their own business for the first time. They're probably better than 90% of the people out there, so we don't discriminate against new businesses. What we do with brand new startups is we just make sure that their customers are happy with whatever the product or service is that they're offering. We become an extension to help them build their business.
So when you mention about startup, let's continue that conversation. So the main thing you're looking for is experience. From time to time, we do have client come to us saying that, hey, I am starting up this business, or I just have a contract from the government asking me to purchase a certain amounts, certain stuff. So how can we fund somebody like that?
So there's two answers for that. The first one is if they're providing a service or something, and they're going to generate an invoice, I can help them on the first day they're in business by liquidating that invoice. So from that standpoint, yes. But let's switch gears to what you mentioned on government contracts. Government contracts are like a lot of other things where you have to buy a good to be able to deliver a good. And you have to have the money to be able to buy the good up front sometimes, or put some sort of a guarantee, like a letter of credit or something, before you can get the good to sell it. So all that has to take place before I am involved of funding an invoice. So how do we do that? Well, I don't do PO finance. However, I have two partners, and when I say partners, they are other businesses that I have partnered with, and they do the PO portion and I do the factoring portion. And I can tell you a story, and it's my story because I was involved as, call it a participation. So I had money in the factoring transaction. But we had a gal come to us in this situation where she said, it was lingerie, believe it or not. And she had huge orders for lingerie, and she had a manufacturer in one of the Asian countries. And she had the whole transaction laid out. She just didn't have any money to start it. So we brought in a PO company that did the PO financing. We factored the invoice once it was created, when the lingerie made it to the States and was delivered. And then we paid out the letter of credit, and she got the profit. We did that 3 times, and she had enough money where she didn't need us anymore. And she started the transaction with no skin in the game. So it is 100% possible to do it with nothing but a plan.
Beautiful. That opens up definitely opened up a lot of door for us. Now, in terms of the size of the loans, can you talk to us a little bit about, what are you funding? What is the size looks like? And obviously, you know, how do we get paid, right? So,
Yep. So first off, I have a very unique situation in what I can, the size of deals I can do. For me, the determination is more of a comfort level where we are comfortable with the concentration risk of a giant client. That's really our consideration because, from a money standpoint, I can tell you that I don't have all the money that we need. However, I have a partner that is just wonderful at raising money. And right now, he's raising money all over the world. We have hundreds of millions of dollars to be able to loan out to use for all sorts of alternative lending. And we've actually really ramped up that part of the business of the money raising simply because the outlook for the next 5 years is for banks to tighten their belts big time and for the alternative lending market of all different products to grow into the trillions. And so we want to be prepared for that because we're experiencing huge volume now with prospects coming in, and we're not maxed out by any means. We want to meet groups like yourself. But we know that this space is going to double, triple, and quadruple in the next 5 years.
wow. Okay. Now in terms of individual clients wise, what is the loan size looks like? Is it 100,000, 200,000, a million?
So
What is the
generally what we do is I don't have a minimum, even though many feel I should, because we do work for some very small companies because I keep telling Brock we need to remember where we came from. But aside from that, we do deals now with facilities anywhere from 500,000 up to 30 million. Once we go over, say, that 25, 30 million mark, then generally we will still do it, but it'll be more so done through my colleague, Garrington. So truthfully, doing deals up to 100 million with Baker Garrington and Garrington both involved is entirely possible.
wow, this is good to know. Donald, I see your hands up.
Yes, thank you. I want to thank you, Bob and Brock, for your information. I'm just curious. I've had two clients. One is has a idea for growing a brewery, and the other one a liquor distributorship and a manufacturing company. Do they fit in your type of program?
Unfortunately, that's startup capital for the business, and startup capital isn't really what I do. I do know some places that do. So if you would like to reach out to me, I can see if I can get you a couple names.
Thank you.
Don, to answer your question, yes, we do have access to funding sources like that. So the best thing for you to do just to submit the scenario form to us. Yep. Then I can reach out to Bob and Brock. Okay.
I appreciate it.
Yep.
I'm curious because they get contracts from other people to make the beer and buy the beer from them, and they're using POs to get it. And I just wanted that fit. But thank you for the information. You
bet.
Again, if you have any questions, feel free to raise your hand or feel free to type into the checkbox. And another question, Bob, is that can you share with us what the rate and term looks like?
Yeah. That's another thing. Factoring has always had a reputation of extremely high prices and rates. And quite frankly, it's the truth. I mean, I remember the days when I first got into this industry, term sheets were at 3.5% for 30 days, every 30 days. So a 60-day invoice cost you 7% of your margin. And that wasn't the expensive companies. The expensive companies would have that same rate, but then there would be pages and pages in their contracts of other additional charges and fees for different things. And today, those kind of rates are all the way down to where our average rate is 1.5% for 30. rather than the 3.5% for 30 that it was, say, 15 years ago and 20 years ago. So the rates have really come down.
And in terms of the terms wise, normally is it what, 30 days term, 60 days term that they need to pay back, or how does it work?
No, we don't dictate that. We don't say when we have to be paid back. The paperwork, contracts, POs, or a simple phone call to an accounting office for the customer, for your client, we ask them, what is your process for us submitting the paperwork and also for you paying it? Because we don't come up with our own rules that we put on our clients to maybe mitigate that. What we do is say we have to follow what the company that pays the bill requires.
I see. Well, thank you so much. Also, do you everything I'm sure that some client is not factorable, right? So what I'm trying to say is that, do you verify who their client is? So let's say they receive they provide an invoice. So that invoice could be anybody.
There's actually two parts to that. In the initial underwriting and setup of a client, we do look at their background and some different things. Really, the biggest thing that we need, that I see stopping deals in, say, the last 6-8 months, was UCCs. So many of them now have turned to MCAs. And MCAs, if you don't know what they are, it's merchant cash advance.
Yep.
And, I suppose they're a good product if used properly. The people that I see with them aren't using them properly. And I have to wade through those in order to file a UCC on the accounts receivable that I fund. So that's usually the biggest thing there. When it comes to the actual customers, we do credit check them. We have a credit department, and our credit department does their own in-house verification by looking at all the different credit reporting agencies. And then we provide what we feel comfortable with as a limit. We actually don't stop there, though. What we also do is use credit insurance. So we use a credit insurance company to try to insure all of our receivables. But not every company is insurable. So we purchase as much as we can. What we're able to purchase for our clients on their customers, we do make that an add-on with no additional cost to our client, and they become a loss payee with me.
Understand. Now, what is the time frame for somebody to actually, from the time that they apply for the factoring to the time that they actually get the fund?
So generally, it's about 1 week, and we've done our underwriting, set out contracts, and ready for a first funding. The only time where that drags on is usually one of a couple things. One is sometimes we don't get all the needed information very quickly. So then the time will sometimes drag on. The other thing, though, is sometimes there's UCCs that we have to work through. We had one the other day for a company that had almost 40 UCC filings on them. And by the time we waded through the equipment and all the different things that weren't in our way, we really only had to worry about 3 or 4 of them. But that still takes a little time. You have to contact them and ask them if you provided legal documents, if they would subordinate just the accounts receivables and that sort of thing.
Got it.
So generally a week. If we run into the UCC problems or something like that, I generally don't ever see it go out past a couple weeks.
Understand. Thank you. Donald, your hand's still up.
Yes, sir. I put it back up again. Thank you for asking that question. But the other question I had is there a ideal client, and is there any client we should stay away from?
I think that to tell you that there's a client you should stay away from is like passing judgment before you know who you're passing judgment on. Because most of the time, unless they have contracts that are called paid when paid, or unless we know ahead of time that they're insolvent or their accounts receivable aren't legitimate, it would be hard for me to tell you who not to try to visit with. What I'd rather do, though, is say who's optimum. And what's optimum is anybody that provides a good or a service, sells it, and has to wait. Now, the only thing really for us, we don't do telecommunication and we don't do paid when paid. A lot of companies will say we don't do construction either. I don't generally say that because of this. The reason most companies say it is because generally construction is progressive draws and paid when paid. And those things are not factorable. However, there is hundreds of millions and trillions of dollars of construction that goes on in things like oil fields every week or month or year in the United States. And it's called construction, and it's 100% factorable. So a lot of it depends on the contract. So if it was me, if you had a client that had a cash flow problem, or they needed equipment and they have no money, they're maxed out, or their bank won't give them any more funds, those are people that we would want to talk to, because we can use the accounts receivable as collateral and funds to get them the equipment, or we can use that money in order to get them money to be able to grow and take more work that maybe if they're maxed out, they can't afford to accept more work. So then that stops their growth. If I was to say to you, Donald, what the best customer there is for myself, it would be the entrepreneur that wants to grow. That's really all I would tell you.
Thanks a lot.
Do you deal with international clients? Or let me rephrase it. The clients here in the United States, but the invoice is actually overseas.
At this particular time, we only work with Canada. And the reason is because we have offices in Canada, and Garrington is based in Canada.
Okay, good to know.
Because our private debt fund is all over the world right now raising money, we are working to start that market. And Tori, my partner in the Garrington, he's the Garrington side, he's committed to open up, Latin America and all these different places to what we offer. And the first step to that is he's out there right now visiting all those countries and establishing actually lots of participation models in those countries. So it's something that's coming. At the present time, only Canada.
Well, that's fair enough. That's fair enough. And again, if you have any questions, feel free to ask. Feel free to raise your hand. Let me ask you in another thing, Bob, that you've been in this field for a long time. What do you see? What is the potential of this field? Because many of us right here in this room, we are accustomed to the 1 to 4 unit investment property, commercial real estate funding, so on and so forth. So definitely account receivable, it's something new to many of us. Give us some, let us know how big this industry is.
As part of the gross dollars, I do not know. What I do know, though, is that it's hundreds of billions every year in the U.S. alone. And we are behind the times. Factoring isn't widely used and accepted in the U.S. like it is in other countries. Mm-hmm. In the Middle East, in Russia, in England and Germany, factoring is as common as a bank every corner. It's just a common form of funding, and the rates are higher. I'm not sure how that works, why it caught on so quickly in other countries. It's been around since the caveman days, but it's never been a wide mainstream thing until probably the last 20 years. But because of things like what I feel I'm doing, I feel I'm taking a product that I wouldn't even use. I wouldn't have used factoring the way it was when I signed my family up for this, and it was the biggest mistake of a signature I might have ever made. But I feel like if you monitor how much you use it, because it is more expensive than a bank, and here's my saying, if your customers can use those dollars to maintain their business or grow their business, you know how much you need to factor those dollars to do that for your business. But if you're going to factor dollars because a factor put a minimum monthly in your contract, and some of that money is going to sit in that business bank account without being used, you're wasting dollars every month. So I feel, even though I can't take the rate and get it down to 8% per annum like a bank does, I can make it to where you get to pick and choose when you use it, and you use it when it's fundamentally a good business decision. I feel this market is going to double and triple in the next few years. And to be honest, when Brock first got out of his university where he played football, I thought he was going to go into sports, and he didn't. And he wanted to do something with this.
Mm-hmm.
And I actually was setting him up to be a broker like all of you, because the money that a broker can make doing this, and you don't have the risk that I do. I've taken hits where I've lost $1 million in a day. And it is not easy to sleep, and it's not easy to want to go back to work the next day and loan out money. I wanted him to be a broker. And the reason was because I see what you do being more important than what I do. Because if I was in your shoes, I would put a marketing plan together that you're going to help these business plan their financing for free.
Yep.
Because I pay you, they don't need to pay you. Right. Is really where I would come from if I was a broker. The lenders are who I'm going to sort out for you, and they're the ones that are going to pay me. So I'm giving you a service for free. And that's how I would market it.
Understand. Well, actually, the way that I feel is that if any of this business go into a traditional route to get funding from a bank or working capital or revenue like that, it takes forever. Honestly, we have somebody that out there looking for $100,000, and it's already 45 days into the underwriting. They still have no sign of where they get the money from. So the way that I feel is that a lot of these businesses out there, they cannot wait 45 days, 60 days to get funding, especially for small businesses. They need to pay their staff, they need to move forward, need to get funding for the next project. So I think that there's a place for factoring. MCA, this type of loan. Yes, they are very expensive, just like you said, but the way that I feel is that, it's just like medicine, right? Every medicine serves a purpose. Every type of loan serves a purpose. And if you use it correctly, it will help you to grow, help your business to grow. But if you don't use it wisely, even though the interest rate is low, it's still going to hurt you. So that's how I feel. Mark has a question. He's asking, do we need any type of license to work? No, you don't need any license. Am I correct saying that, Bob?
You are correct.
Yep.
All you're doing is making recommendations of a lender. Correct. And making sure they don't get taken advantage of.
Yep.
And so you don't need any kind of a license. The only one that does is myself, and then, of course, the credit agencies that I work with.
Yep.
So. Mark, you had another question about the lowest and highest factoring loan. I'm going to answer that two ways, because generally what I do is not called a loan. I'm actually purchasing the accounts receivable. So that's why it's called factoring. So those I don't call a loan, but I will do them with a facility right out of my office, up to say 20, 25 million. The difference for me between a $1 million factoring facility and a $20 million factoring facility is nothing more than asking for more information and a little bit more in-depth underwriting. That's really the only difference between 1 million and 20. So in factoring, because the most important thing in the transaction is collateral, which is their invoices and the backup. However, we do loans on the side of factoring facilities. And the biggest one I guess I've ever done is 900,000, where I just do a promissory note or some sort of other collateral for a client with a factoring facility. I do dozens and dozens of them a month in that $20,000 to $80,000 range for businesses. And then I do a handful between 100 and 500. So I hope I've answered your question, Mark. If I haven't, please jump in. I'm happy to answer it if I'm not doing so far.
Right. So just to continue what Mark asked for about the licensing, not only that you don't need license for factoring, and as a matter of fact, in our world, the commercial lending world, whether you are doing 1 to 4 unit investment property, construction, fix and flip, anything that is on our platform, you do not need a license. And a lot of people don't understand but that is the nature of commercial lending. But if you're talking about if your client is purchasing the same exact property as a primary residence, yes, you need a license for that. But if that client purchasing that exact same property as an investment property and purchasing under an LLC, then you do not need license for it. Okay. So again, it's a lot of people don't know about this what's going on in the commercial world. So that actually opens up a lot of doors for all of us right here. So because imagine if you're just a loan officer, you need to get licensed, you need a partner license, you need to have license for every single state. But here in commercial, you don't. There's no licensing. There's no such thing as a commercial loan officer license. There's no such thing. So you can do businesses all over the country, and in some cases we can even do overseas, just like what Bob said. They can fund in Canada. Okay, so if this is the first time that you're on our platform, please check us out. Please talk to the person who invited you. Connect to us on our Facebook page. Connect us on our YouTube channel. All the trainings like this, we record it, we put onto our YouTube channel. We are very transparent. We want as many people out there to know about platform like this as possible. And again, the goal is to have everyone out there to have an extra revenue to generate some extra income. Okay, guys. So we are on the top of the hour. If there's no more questions, then we'll call it a night. Well, again, thank you so much, Bob and Brock, for your wonderful presentation on the factoring, and love to start doing business with you guys.
I would like to share
Sure.
Tomorrow. I'll put together an email for you, Ellen, of some brochures and different things that you're welcome then to share with the group.
Please. Absolutely.
Sounds great.